Today I'm gonna go over how I was able to make 8 risk reward trading one of the worst sessions possible for indices, ages session, while only maintaining a 50% win rate trading this session off 4 trades. So let's get straight into the recap. So first off, always start on the higher time frame, right? On the daily, I don't think I saw much on this day aside from us mitigating obviously a daily demand here. We can go to the 4 hour here. Not much else on the 4 hour aside from understanding. Again, like I said, we mitigated demand and we're bullish. So I usually have a bullish bias here up until a potential mitigation or reversal point, which for me, I noticed we were in this gap here. So if we go to 30-minute, we're in this fair value gap. There's a massive gap here. I don't trade FEGs for those that know my channel. I trade the mitigation points of PYs. And so mitigation point is either going to be drawing to the 30-minute, and I believe we were in a 4 hour here, or there's a 1 hour here. Now, I just went to lower time frame and checked each one to see which PY was closest above this kind of inducement here. And because you guys know, like when we take out inducement or major liquidity, especially if this is like a higher time frame inducement, which it is in the 15-minute with the new session high sweep, you want to be more careful because we can get like a reaction on a lower time frame to downside after sweeping this inducement here, and not always even mitigating too. So something I kept in mind, I wanted to refine it and not make it too far in a sense, because again, taking out inducement, you got to keep that in the back of your mind. So what I was looking at here was actually, I had the wrong bias initially. So this was your inducement, but what I was seeing here is inducement here. So always look for inducement first in a range. So from this range, this is a very big range, by the way. I believe this is aftermarket NYSE closure. So we just had a massive pump here. This is your range here. You always look for inducement first to define your range. So I found inducement here. And so my range here was basically something like this. You look for a PY right below inducement, which is this. And your inducement's here. So I wait for inducement to get ran, which it got ran here, right? And then here's where I kind of went wrong in a sense. So instead of flipping bullish after taking out the inducement, I was thinking we could go lower to mitigate this PY below here, which is not a horrible idea. So I took a stop on right here because this high internally hit a new low. Now, I'm gonna be honest, this is something that doesn't meet my criteria too well. I shouldn't have taken this high here internally. I should have taken this high just because I usually, you guys know, don't like taking these small, tiny pullbacks. I prefer a bigger pullback. And yes, the candle has to be in the opposing color for it to be considered a pullback. If this was all bearish candles, this is not a pullback to me. It has to be a bullish candle. So I should have had a higher entry here, honestly, here, but it is what it is. I took a -1 loss here, trying to target this PY right below. I was anticipating this to happen and then us to make that new high. I'm following the trend, basically taking out the inducement, or mitigating, sorry, the 15-minute PY right above inducement here. So we failed that, and what I noticed at this time is I believe ES mitigated what I wrote in my notes here. ES mitigated this PY here relatively. So there's a SMT mitigation here, meaning NQ failed to take out this low and mitigate the PY, but ES took out the low and mitigated the PY below this inducement. And so because of that, unfortunately, I took a loss here. And you can see I didn't go break even either here because I was a little too confident on this trade here. I could have easily went break even. I mean, this almost went for a low. It's like one tick away. There's no reason not to go break even at this point because price should be going lower here. But I took a loss here, which is okay. Another thing I did see, again, I'm going to point out my mistakes as well because no one's perfect. Every trader does make mistakes from time to time. So my mistake here was also kind of marking my inducement wrong here. It shouldn't be just this here. My inducement should have been this entire thing here. Because if I mark this as inducement, this is assuming that there's an unmitigated PY here below, which there isn't. This is all fully mitigated already. So this whole thing should have been inducement, meaning if this whole thing was inducement, I would not have taken this short here. I would have waited for this to get taken out, or I guess looking at ES, you can see ES mitigate the PY below. It's a pretty big difference SMT here, just because, I mean, ES basically ran double of what NQ ran to get to the PY, but I believe ES's mitigation PY was much closer. It was like around here. So anyway, point is, this failed, did not hold. stop hunter, took a loss. Reset your brain, recalibrate, and I came back again. I was too like stuck up on my bias, I think here. Just trying to take this short here, and I don't think I was. Yeah, okay. Actually, never mind. I wasn't stuck up on. I remember this day now. I wasn't stuck up on my bias here in terms of going for this because I noticed this after I took this loss. Unfortunately, I should have noticed it earlier, but I did not. What I was doing here was basically, you can kind of say revenge trading a little bit, maybe ish. I was trying to take price to a mitigation cycle back down because I knew that I was trying to long this market here. So I was taking a short into my long essentially, which ultimately it did not work out here. This mitigated this origin here above. I think this was maybe the 5 minute. Let's see, was it a 5 minute or I think it was just a 1 minute. So it was just a 1 minute here. We have two different PYs on a 1 minute. So this one and this one, again, you can consider both these origins honestly if you want, because they're basically in the same place. If there was something like here, this would be your flip. But yeah, it mitigated this origin here and it took out this liquidity. So I thought, we can get a move here, but this was their fake out. Took another loss here, so I was down 2 risk reward here, and then we finally mitigated the origin here above, and I was willing to give it one more shot. Where is my trade? Well, here's the IFEG. Turn off my indicator real quick so it doesn't look like a mess. Here's the IFEG, body closure above or below. I meant took the trade. You can stop loss wherever you want. Honestly, here we almost went back to the OB mitigation entry model, but we did not. So took it there, covered the OB. For the most part here, like the sell to buy or buy to sell. And then my TP, I was just targeting, I think this was the 5 minute this time. It might have just been the 1 minute as well. Let's see. Yeah, no 5 minute. I think it was the 1 minute here. There's a 1 minute PY here. Again, you can target whatever you want. Honestly, looking back now, I probably should have just targeted this for 1.5 instead of a 2 because we could have reversed here. Like, you just never know, right, with the market, especially if you're counter trending. You don't really want to be risking that, but my TP was slightly past that. We had really good momentum here going down. So 2 risk reward here, taking this counter trend, trading this mitigation cycle, which failed the first time, but we got it second time into the demand. The origin here. And then look, at this point, I was saying you guys can pretty guess. Like I said, we have momentum here. A lot of imbalances here. Candles in the same color for the most part. This is an impulse delivery, impulse model. So where's my impulse model? Well, you enter off a buy stop, candle break. I don't recommend market executing on an impulse model. You should have a buy or sell stop so you instantly get executed, because if you wait, sometimes you might get entered up here, and that cuts your risk reward by so much. So there's my A risk reward, just using the impulse entry model that I teach you guys within the course. And then my target is very straightforward. It's the PY right above this liquidity here, this inducement here. And you can even refine it to this if you want, whatever works for you. And you can see ultimately it did run very far for sure here. After mitigating, I believe the 1 minute refine here. So there's a 1 minute refine here, and you could have had a really nice short off that 1 minute refinement. And I don't think there was a fake out either here, I believe, to the downside. There might have been one. Can't really see, it's not too clear. There's no OB entry model. There's potentially an IFEG, but that's basically the setup here, explaining how I went from the wrong bias to basically ending the day green by just recalibrating and keeping my senses correct, because a lot of you guys are like tilting after starting the session with the first loss or two, and that's never how trading works. It's a game of sequence and probabilities, and you don't know if you're going to start the day with a winner or a loss. Your focus is really just on the technicals and taking the high quality setups. So for example, here on the 1 minute, this would be your PY on the 1 minute, and you would have got a nice trade here. See, we mitigated that 1 minute there, and then depending on how you want to take this, there's the IFEG right there. Actually, this would have been an amazing setup, by the way. You could target here for 4 risk reward. Doesn't look like a far target, but that's 4 risk reward. If you target a PY below, 7 risk reward. Almost hit stop loss. I don't know if this actually hits TP or not here. We'll see. Okay, it did actually hit TP then, but this would have been the other setup you would have taken after I TP'd at my longs because, like I said, this is high time frame, 15-minute inducement, 15-minute supply. Could have took a very nice setup here. But hope you guys enjoyed today's little recap. If you guys did enjoy, make sure to leave a like, subscribe, and I'll catch you guys in the next one. Peace.